I hope you guys can see my screen. Can you guys see my screen? Can you see my screen? Drop one on the chat. If you can see my screen, drop one on the chat. If you can see my screen, let's go, farms. Let's go. All right. Thank you, farms. Let's go. Let's go. So this class, let's go straight to this class. Like I said, it will be mind blowing and just like the theme of the bootcamp, back to the basics. Like back to the basics. Let's take forex back to the basics. Let's stop making things too complex. Because sometimes I look at some people's charts, you see marking, FVG, favor lookup, right? Imbalances, stuff like that. They're actually very cool, right? They're actually very cool. But there are easier ways, like there are cool ways to trade these bad boys without having to go too complex. Don't make things too complex for yourself. There are easy ways to actually make sure that you get the profit from this market without having to go extra miles, drawing things like beautifying your charts or stuff like that. Okay, so today I'll be exposing us to that big synthetic indices strategy that I've used over time for myself, and it has worked very well. But mind you, like I always tell you, trading is 10% buying, 10% selling, and 80% waiting. Now, if you can't wait, you'll be used as liquidity. The ships get slaughtered in the forex market. So if you can't wait, then definitely you'll be used as liquidity by the big boys or the sophisticated traders. All right. So trading is 10% buying, 10% selling, and 80% waiting. All right. So this strategy today, I'll be teaching us today, is simply 10% buying, 10% selling, and 80% waiting. Definitely, it applies to all forex market because you can't always look to be on the market every now and then, like you are in the front of the market when you can get the bakery itself. You're picking crumbs of the market. Okay, so first of all, what we're looking at today is the daily range. As simple as daily range. Yesterday we talked about range. We talked about range. We talked about market structure. So market structure, range that we talked about yesterday, we'll be using that. Okay. Yes. If you were with us yesterday, we talked about range, and some of the mentees said that the range is simply the distance between two swing points, right? Maybe swing high and a swing low, or a swing low and a swing high. All right. So the very first one we're talking about today is the daily range. We all know that, for example, we have something like this. We have this candlestick like this. Let's say this is a bullish candlestick, something like this. Okay, this is a bullish candlestick. Then we have maybe a week up. Okay, we have what? We have another week down. All right. So let's take, for example, this is a daily candle. This is a daily candle. It's a daily candle. All right. So from our knowledge of big forex market, we know that here there's what we call the OHLC. OHLC. O stands for what? Open. H stands for high. L stands for low, and C stands for close. Right? OHLC. That is the candle open, the candle close, the candle low, and the candle what? High. All right. So the high is, like we know, open is the very first point that the candle started with at that day, at that particular day. That region, that what price started counting from that very particular day. Okay. Why we know that the high is the highest point that the price ever got to. Then the low is what? The lowest point that price ever what goes to, and the close is what? The closing price for the day. So from this candle now, we can quickly say, this very first point here is what? Is our, sorry, I didn't pick that up.
Follow it, come and lie down here.
This very point here is what? Somebody should tell me that point is what? Somebody should tell me what that point is. Myself, I don't know. VTN mentees, where are you guys? What is
Daily
that
high.
up? What?
High. That's the up.
Okay.
Daily high.
Daily high.
So this guy here, this first one here is what is daily high, right? That's the highest
Yes,
point
sir.
that price ever what got to, isn't it?
Yes,
Now,
yes, sir.
this point here is what?
Open.
Please take note. It's what?
Open. Price open
They
there.
close. They close.
Is what?
They close, sir.
Okay, close.
All right. Is what? Is the closing what? Price of the day. Then this point is what? The third arrow is what?
They open, sir.
Is the open. Why this point here is what? The low.
No.
All right. That's just by the way, because I know most of us know this. Okay, this is what open. This is the high. Here we have the close, we have the open, we have the lowest point that price ever goes to for that particular day. This is not what we are. This is not what we are looking at for tonight. Just to refresh our memory. So now, if this candle here is what is a daily candle. If this candle is what a daily candle, then the daily range is what the distance between the what the highest point that price got to and the what and the lowest point that what price got to. So for this candle here, the range is what? This is the up range, while this bad boy here is what is the down range. That is the distance between the what the highest point price got to for that day and the lowest point that what price got to for that day. That's the daily range. All right. So that is as simple as that. Like I said, it's a basic strategy. So everything about it is what is very, very basic. Daily range, distance between the highest point and the lowest point of the daily candle. Simple as that. All right. So the second one we're talking about is what the period separators. The period separators. Who can tell me what they understand by period separators? Period separators. Mm-hmm.
Talking now.
Period separators. This was we just use our MT5 and MT4, but we don't even know.
Close my eyes.
Some of us don't even know. Please mute yourself. Please mute yourself, fam.
Okay.
So now some of us just have those period separators on our charts, right? And we don't even understand what that separators, what they are all about. We don't understand what they are all about. All right. So now, if you go to MT5, you go to your settings, you see that option there, period separators. You see on your settings, you see that period separators. Have you guys you can check now, farms. On MT5 or MT4, you always see that period separators there. If you can see it already, drop it to 2 on the chart. If you can see it already, drop it to 2 on the chart. If you can see it already, drop it 2 on the chart. On the MT4, MT5. Nobody? Don't tell me don't tell me that, farms.
I will make my own now. Leave this one.
Please, Mr. Vitros, please can you mute your mic?
Okay. Sorry.
Okay, Mr. Sokwa. Okay, Mr. Sokwa, I've seen phone. Okay. Then Ivala Samuel also dropped. I think he has dropped Yeah, that's it, fam. That's it, fam. Period separators. Thank you, thank you. So you guys can see it now. That's like I said, it's a basic strategy. So it's everything about it is basic. So there are things that you play with day in, day out, but you probably might not know that, okay, this is what this thing is used to do. This is what it's all about. All right. So how many of us can see it now? How many of us can see it now? For the late for okay. All right, so let's go. Now, what are period separators? As the name implies, period separators. Period, like no period as in time. Separators, like what to separate. Time separators. All right, so it's like period separator is also called what? The time frame separators. The time frame what? Separators. Now, period separators are just those vertical lines you see on your chart that corresponds with the larger time frames. Usually what? The daily time frame. Now, if you see your period separators, you see that when you go to H4 time frame, each period separator on the 4 hours time frame signifies what? The daily what? The daily time frame. Now, if you go to your, for example, let's do this farm, so that you guys, let's quickly go to the chart and let's show us something. All right. So go to your chart, mark out any chart now on the daily farm. Mark out the high of the daily time frame. All right. Then mark out the low. Okay, since this guy has not closed, let's use this guy. Let's mark out the previous low and the previous high. All right. Mark out the previous low and the previous high. Please, as I'm saying this, you guys should follow. All right. Please, everybody do this. Mark out the high and the low of your daily time frame, on any chart, on any asset. Do that, fam. Do that. Have you guys done that? If you've done that, drop a 1 on the chart. If you've done that, daily time frame, Mr. Inka, daily time frame. All right. So now, farms, there's something also to understand. If you've ticked your period separators, have you guys ticked your period separators already? Make sure on your MT5 you've ticked your period separators. Make sure it's on tick. Understand? Are we there? Let's go. Are we there? Let's go. Once you're done with that, you will see those vertical lines on your charts. They automatically appear on your charts. Those vertical lines, you see them on your charts, right? You will see those vertical lines on your charts. Are we there yet? If you are there, farms, drop a 1 on the chart. If you are there, drop a 1 on the chart. If you're there, you actually have ticked your period separators and you can see the vertical lines on your charts. Okay? All right. Okay. So we are there. We are there already. We are there, fam. Okay. That's nice. Just 3 persons. 4. Okay. Farms, let's go. Okay. All right. Okay. All right. Thank you. All right. So that's your period separators. Now, how do we add this? How do we have all these guys as an additional confluence to form our basic synthetic indices strategy? How do we add these bad boys together to form our what basic synthetic indices strategy? Now, let me hide this bad boy again. Let's go. So, now yesterday we've understood market structure, we understood our range, and today we've understood what we know as the daily range and what period separators. Now, please everybody pay attention. Like I said, pay attention, because this is where the trick is. Sometimes you probably put your charts, all right, in a bullish market or a bearish market. Okay, this guy, you've seen that this guy is bullish. The current trend is what is bullish. You would have let's say this for example. Let's pull out this guy. You see price giving you this bullish movement, like this guy's already buying, right? And this is a day time frame. You already have, let's leave this guy here. You already have here as what? You have here as your potential region for entries, right? You have that region for potential entries, for buy entries. But what happens? But price still what keeps going all the way up. Let's say the next daily, what will happen is the next daily probably might come down a little bit. Okay, come down a little, just like this. The next daily candle, something like this. You see price come down a bit. Okay, and still what keeps what going all the way up. Now, when you see something like this, I want to show you guys how you can basically trade the synthetic markets with ease. When you have a bullish market like this, and you have a daily candle that have printed, let's say yesterday, the previous day's daily candle, which take for example, we have this bullish candle here, which was the previous day's candle. All right. In as much as this bad boy is what is bullish, when you have, please take note of this, when you have a retracement, coming all the way back, the next candle, let's say the next candle started what? Bearish. The next candle started what? Bearish, comes all the way down, comes down a bit, comes down. Now, after this has taken out the down range, remember, it has taken out the down range of the previous candle. It has taken out the down range of the previous daily candle. All right. So the next thing you would want to do, farms, the next thing you want to do is to look out for what? Change of market character below this what? Daily. I have a bullish market. I'll show you guys all these things on the chart. Okay. So I have a bullish candle in a what? In a bullish market. The previous day's candle printed what? Bullish. Now, when price, the next day's candle started what? Bearish. It came all the way down, took out the low range of the previous what? Daily candle. So below this daily range, below this daily candle range, I'll look at for what? Market what? Your character, or as market break of structure from a lower time frame. All right. So when I get that market break of structure from a lower time frame, then I can actually take that break of structure and get my quick 1 to 3 or 1 to 5. Same thing if this guy was a bearish. Let's say for example we have something like this again. That a bearish candle. Okay. So for a bearish candle, price actually went all the way up. Okay, took out this previous day's high, right? Now, above this previous this high, but mind you, your market structure must be what? Must be bearish or bullish. Depends on what of what you are trading. If this guy is bearish and I have the previous day closing what as sorry. Okay, so when we have a bearish market, okay, and this candle here that printed was what? Was a bearish candle. All right. Now we have the next daily candle taking out what? The highs of this bearish candle. Now above these highs, we can look at for what? Change of market character or what? Market break of structure. Provided that what? That current market is what? Bearish. Quickly, I'll show you guys a trade that 2 days ago. All right, let's quickly move to the chart. Like, let's move to the chart. Let's show us these things. They're easy, very easy, farms. Very easy. So I hope you guys are following. If you are following me, I need you to drop one on the chart. If you are following me, drop your one on the chart. Now, farms, on this boom 300, you guys will agree with me that we have what? A bearish market here. We have what? Bearish market here. Now, this is what happened. All right, let's go. Thank you. Let's go, fam. Let's go. Let's go. So you guys can see. I know you guys. I know people. So many people be excited with this. All right. So this guy is very bearish. Like pretty much bearish. This is how I caught this trade. This is how I caught this trade, farms. Now, this guy is bearish, and in fact, it was at POI using my market structure. It was at the POI using my market structure because you can see this lower high, lower low, lower high here. Price go to this point, right? Now look at this previous candle. Look at this candle here, this bullish candle. This guy here is bearish, very bearish. What happened? Price went all the way up, and what? Take out that high. Took out that high. Look at that high. Took out that high. This last daily high from here. Took out that high. Okay. Now what happened when I saw that this guy took out that high? I was waiting for what? For a lower time frame entry. So what I simply did was I marked out that region. I marked it out. Okay. Sorry. Let me actually take this bad boy out. Okay. So I marked that power point out, and what? I went to a lower time frame. Went to a lower time frame. Let's go. You can see. Went to a lower time frame, and I saw this, and I saw this. I saw that. Look at it. Price gave me what? A market what? Break of structure here. Price gave me a market break of structure, and what? I took an entry at what? At the retest. Took an entry what? At the retest here. You can see, as simple as possible. Can you see it, farms? Target that, and currently you can see the trade. Everybody, you can check the channel. Check the channel. You will see how I caught that, how I mixed that trade using what? This basic strategy. Somebody have dropped the chat. You can go check the chat, farms. No, CJ dropped that one. No, you know one. Yes. Have you guys seen the chart that was dropped? All right. So there are so many examples. Let's drop more examples. Like it gets to, you guys will to blow your mind. All right. So let's go to another trade I took again. Took another trade again using this. Amazing. It's amazing, fans. It's amazing. Let's go to the daily. Let's go to the daily time frame. Okay. So, farms, you see, I was very interested in C1000 because you see, yes, you know, yes, I was telling you guys that we had this structure here, price came all the way to this region. Okay, now yesterday's daily candle, look at it. This was the low of yesterday's daily candle. This was the low actually. This was the low of yesterday's daily candle. You can see that, farms. All right. Now what happened? We can see price came all the way to what? Close below what? It actually took out what? That last daily low, isn't it? When price put that daily low, I simply what? Went to what? A very low time frame, lower time frame. All right. Lower time frame again. As simple as that. Okay. So let's go. I got that boy. You see, got that bad boy again. You can see market give us what? A lower high here, a lower low, break of structure, and what? And a retest. Now also call this entry. Call entry again. So let's go. Let's see it again. Let's see another one. All right. So you guys can see.
In this case, the market is not bullish.
Sorry? Someone was saying something. You said what?
I was saying in this case, the market structure is not bullish.
Yeah, but there was a retest on the daily time frame. There was a bullish retest on the daily time frame. So when price, yesterday we were talking about break of structure on this cash 1000. When price came the way, when we were explaining the structural points, that is the range and the structure. Let's go to the daily time frame. All right, we had this market break of structure here. All right, and a retest, but this retest didn't give us that new high. All right, the market was what? A new high. What happened? Price came all the way back to what? Tapped from the original range of this bad boy. All right, and on 4 hours time frame, we had what? A market break of structure. So when price was coming back, you see, sometimes I believe if for so many traders, like this morning while I was talking with one of the mentees on this trade, I told him that price, because he had an imbalance on M15. He had an imbalance on M15, so he was hoping, because as a smart trader, he hoping that price will come back to what? Fill that imbalance before going all the way up. But having this basic knowledge of the fact that when price takes out the previous daily range, and distributes or accumulates, then price might not come back for those points or for those inefficiencies or value gaps. All right. So this is a very simple and basic strategy that we've used over the years, and it has been proven, at least, although we know that there's no perfect strategy out there, but instead of making things too complex, things are actually as simple as this. All right, because let's go to M15. Let me show you something, farms, on M15. On M15, let's go on M15. All right, so as a smart trader, you see, we can see this inefficiency here, right? You could see this inefficiency here. All right. So one will be hoping that price will actually come to region for potential accumulations. But you see, there is more to trading than most of these incomplete price actions. Like very basic way of trading market structure. This is purely market structure. We're not going to the fact of liquidity sweep or liquidity grab or something like that. Here we're talking about basic market structure. All right. So when price has taken out the daily range at your POI and it distributes or accumulates, then it is safe to take an entry with your stop loss below the range. As simple as that. All right, and I actually saw that guy early this morning. Okay, and this was actually the trade. So you guys can check the chart. You can see how what that move, that clean move from C1000. How we call that clean move from C1000 using this simple word, but this basic strategy. Very easy, simple. Let's go. If you can see that, drop a one on the chart. If you guys can see that, drop a one on the chart. All right. Actually, that trade you are seeing is currently that's an FT Nigeria account. All right, FT Nigeria account, and that trade is simply probably a trade that will actually pass that account. So forex is actually trading static indices is actually, it can be so basic as that. Instead of making things too complicated and too complex for ourselves, we can actually make things easy. Okay, so on your own, you can actually do a little bit of back test on your own to see. Somebody is saying, Mr. Okome, you said what? I should come again. Okay, you just need to understand. All right. Okay. Let's go by it again. All right. So we're talking about daily range. All right. So we have just like we have range defined as distance between the swing highs and swing lows. Daily range is simply the distance between the highest point of the day and the lowest point of the day. Okay. So in a bearish or bullish market, make sure that the market structure. The reason why I actually taught market structure before I started teaching these strategies, because I want us to understand market structure first of all before we go into this strategy. Because if you have a knowledge of market structure, probably you might mix up this strategy, and at the end of the day, you find you get yourself burnt. All right. So now this strategy works with what? Works in line with what? Market structure. Okay. I have probably have a daily break of structure, or I have a bullish market, or I have a bearish market. All right. Now I have a point of interest, but my the previous daily candle, either the high or the low, has been cleared by the present daily candle. But mind you, there must be what? A change of market character below the previous daily candle or above the previous daily candle. Now, when you see that, you can actually go in with a very tight stop loss on that time frame. As simple as that. Mr. Ukome, did you get that?
Lisa, can you explain with the chart again?
All right, so let's go again. Okay, let's start from 300 again. 300. Okay, let's go. Mm-hmm. So 300 on the daily time frame. On the daily time frame, we know that this bad boy is completely bearish. This guy is bearish. As you can see, we have lower high here, lower low, lower high, lower low, isn't it? So this is a point of interest. before this bad boy starts selling, this point here is what? A point of interest. If you agree that this point was a point of interest, please drop your one on the chart. If you agree that this point here is a valid lower high, drop your one on the chart. If you disagree, drop 222. If you agree, 1 If you disagree, 222. All right. Okay. Agree. Okay. Let's go. So now this point here was what? A point of interest in this what? Bearish market. Okay. Now, assume that this guy is a point of interest. Please mute yourself. Mute yourself so I don't hear. All right. Okay. So now, when price is coming all the way to this POI, price printed. Let me mute this guy.
Your screen is not displaying.
Reconnect. Try to reconnect.
Hello?
Mr. Dada, please mute yourself. Okay. I'm muting him already. All right, thank you. So this here was what? A valid lower high. All right. So when price is coming all the way to this POI, you see there are several confluences that one can easily use to get into the market. All right. So when price is coming all the way to this region, you see price printed this candle, and above this candle, above this candle you are seeing here, price actually took out the high. That is the daily range, the range high of this candle, of this
Hello, can
daily
we hear
candle.
any audio?
So when price took it out, now what you should be looking at for is a change of market character or a market break of structure. Okay, so now we went to M15, 15 minutes time frame. Okay, went to 15 minutes time frame, and we saw that change of market character, that break of structure. You can see that market gave us that break of structure, came back for the test, and it's falling all the way down. Please, do you understand? Mr. Okome, do you understand now? If you understand, drop a 333. You don't understand, drop 4444. Okay, all right, Mr. Okome, you understand? All right. Okay, understood.
When considering the strategy,
yes, fam.
When considering the strategy, is it the candle that would take out the high of the previous day? Is it the next one? For instance, let's say we have a candle now and we are looking for the high to be taken. Then the following day, the candle did not take out the high. Then that's the price action for the following day. Then after that, the day after that day, another candle now took out that high. Is it still valid?
Come again, fam. I don't get that. Come again, fam.
What I'm saying is that, okay, let's say for instance now, price is at a POI. Price is at a POI.
At a POI, okay?
Yes. And then we're expecting the following day's candle to come and take out that high. But probably it didn't take it. Then the day after that, such action happened.
Okay. And it took out the high.
Yes.
Okay.
Then we now have a BOS in our direction.
It took out the high and get the BOS, right?
Yes, in our direction.
But, yeah, in as much as your market structure is bearish at that point, very, very valid. Or you've gotten a break of structure from a higher time frame, very, very valid, fam. Very, very valid.
Now I want to be clear about something. Is it let's say for instance, now let's say we are looking for a sell. Is it the open or the high?
Let's say you're looking for what?
Let's say we are looking for a sell now.
Okay.
Yes. Is it the open of the candle or the high of the candle that we are
Is the
looking?
I never said open. I said the high or the low. High or the low, not
Okay.
open. Yes.
Okay.
The highest point or the lowest point. Yes, fam.
All right. Thank you.
Yes, fam. Okay. Any other question? Any other question, farms? Any other question? Any other question?
Okay, sir, I have a question.
Okay.
Concerning
Let's
this
go.
concerning this boom 300 on the daily, we have multiple candles in that POI.
Boom 300
Yes.
on the daily time. Let's go.
Yes, sir.
All right. Let's go.
Okay, we have multiple candles in that POI. So does it mean
Okay.
we can use any of the candle, because I can see some candle that's wicked above. That didn't close.
Did they give a change of market character?
Okay, I didn't check that actually. I just want to clarify myself.
Yeah, you need them to change your market character. That clean change your market character. Yes.
All right. Thank you, sir.
Yes, fam. You're welcome. All right, let's go. I need more questions. More questions, farms. More questions.
Okay, sir. Good evening, sir.
Good evening, fam.
Good evening, sir. My network is very, very poor. So I barely hear what you are saying, but I'm just trying. I'm managing. What I want to ask is that 15 minutes that you show that break of structure. I want to ask a question in that 15 minutes. I don't know whether you can go back to that 15 minutes.
Okay.
Can you hear me, sir?
Yeah, I can hear you.
Can you hear me, sir?
I can hear you. I can hear you from. I can hear you. Hello. I think we lost him.
Okay. Sir, can you hear me? Sorry.
Yes, fam.
Okay.
I can hear you, fam. I can hear you.
I guess his network is bad.
Yeah, I guess it's network. Let's go. Okay, more questions. The ladies. Do you guys understand? Do you guys like? I don't know. I can see Chime Okere. I can see.
Network is very bad. Sorry, sir. So I want to ask that 15 minutes there. I'm seeing that bearish candle. That little bearish candle there. Does that one stand for that candle? Like, can I use that candle for a break of structure in 15 minutes?
Yes, fam.
Okay. Because sometimes when I use it for some assets, it does not hold. So that's why I'm just asking.
That's simply market doing its thing. But using that guy as a market break of structure makes sense.
Thank you, sir.
You're welcome, fam.
Will the record be available, sir?
Yeah, it will. Okay. So what you're saying?
Will the record be available?
Yes, fam. Yes, definitely, fam. Somebody's asking if the BOS must go 15 minutes. Actually, like I said, from my very first bootcamp, I take all my BOS from 15 minutes.
Sir, will the record be available?
Yes.
Okay. How can I get it?
Don't worry, you get it, fam.
My network is very bad.
Don't worry, everybody will get it. So, Mrs. Mercy, I believe I've answered your question.
Good evening, sir.
More questions. Evening, fam.
Sir, can we please go back to that 4 hours?
I never did 4 hours.
24 hours, I mean, the daily.
The daily. All right, the daily. Somebody's asking if this strategy applies to currency market as well. No, sir. Please, no, sir. Tomorrow we'll be having a basic strategy for market for currencies. Okay, we'll be having that for currencies.
Yes, sir.
Yes, fam.
Now,
I'm with
this
you.
POI marked now. Let's assume this bullish candle, the bullish candle, the next candle created didn't week off the bullish candle.
Okay.
How do we play that, sir? Do we still wait for a break of structure at that point?
If the bullish candle doesn't close above the, please note the rules. Price must take out the daily high or the daily low and give you what? A change of market character. That's the rule. Okay. So let's not assume we're not physicists here. All right.
All right, sir.
Welcome, fam. More questions. Please bombard me with questions. I believe we have market gurus here. Please come up with your questions. Let's go.
Good evening, sir.
Evening, fam.
So, in case of this daily time frame,
are
you going to wait for price to reach your POI and maybe grab liquidity and close below above that candle before you go to lower time frame?
Yeah, actually, see, the reason why I don't want to hear liquidity is I want everything to be basic. Like, let's see if we can actually get these things basically before we can even tip off smart money. Because, like I said yesterday, you see smart traders. In fact, smart traders these days, when you see smart trader marking up their charts, like in most cases, I feel like what was this guy? What was he doing? Because what you see these days is people just taking BOS from any time frame. Like, you just go to any time frame, you see BOS, like F15, you see BOS. I'm taking it. Now, why are you taking this? Next thing here is because I saw a liquidity sweep, I saw structure on a lower time frame, and I'm taking the entry. Mind you, smart money is structure itself. But if you're not playing structure in smart money, then you always come out bloody. Like you always end up with losses. All right. So let's try to understand structure first of all before we even talk about smart money. All right. So instead of making things too complex, you see people hearing RPG, FVG, IPA, all stuff like that. I'm not saying this is they are actually they're awesome, right? But there are basic way that you can trade this market. There are so many basic ways that you can trade this market without even having to draw so many things on your charts, making your charts beautiful, and at the end of the day, you still end up packing up losses. Right? So let's just make things more basic. Let's make them basic, right? It's as simple as that. Simple, it's easy.
Okay. So the question is, are we going to wait for price to reach our daily POI?
Sorry?
The previous. Are we going to wait for price to reach our daily POI, as in the case of the 300 now?
Yeah, and there are so many cases where you can use this strategy. Okay, at your POIs, one, then in the bullish market. Because sometimes this thing happens a lot. For example, I probably have seen a break of structure on 4 hours time on the daily time frame, a break of structure. Now, market coming back for retest. Market coming back for retest at that's my point of what interest, where I'm looking to take a retest from. Now, when price takes out the previous daily high or daily low and gives me an accumulation or distribution, that is change of market character, then I'll take that trade idea. All right. So this case scenario where you have to take your entries at maybe a valid POI 1 or price coming for a retest at your POI now. You are waiting for what? The last daily lows, okay, or the daily highs to be what? Taken off, then give you that change of market character, and you what? You hit it hard. Okay, as simple as that. Okay, now someone is asking how the period separators come in. Okay, it helps you to it helps for your MT5. The period separators helps you to know your daily range. That is, let's say for example, you are trading, you are the day time frame. You've marked out the high and the low. Okay, now you now scale to a lower time frame. Now the distance between those two vertical lines on your MT5 is simply what? The daily candle range. Okay, from the open to what? To the last candle is printed for that day. When you go to a lower time frame, you see that what? When you mark from the first vertical line to the last vertical line, it's simply from the start of the candle to what? To the end of the other candle. It's just to help you to identify what? The periods, the periods between what? The smaller time frames. So that period separators on your smaller time frames signify what? The whole daily candle. So that's where the period separators comes in. All right. So somebody's asking the question again. Okay, I think I've answered that question. More questions.
Coach, I want to ask this question that must the candle that we are looking for instance, let's say we are looking to take a sell now.
All right.
The candle we are looking to take, that the high will be taken, must it be a bearish candle? Yeah.
Must it? No. It can be bullish, can be bearish. Can be bullish, it can be bearish, can be bearish. Exactly, fam.
Yes, good evening.
Evening, fam.
Yes, sir. I was just testing out the strategy on V75.
Sorry?
I said I was trying the strategy on V75. So
you are what? I can't hear you, fam. You are.
I noticed that after the liquidity has been swept, after price has taken the low or high of the previous day, and after the break of the structure, sometimes there is not a retest. Is there a way we can take it?
Sometimes there's no retest, right?
Yes.
Yeah, sometimes price might not give you a retest, right? Sometimes price might not give you a retest, but in most cases price will give you a retest. Okay, so if price will not give you a retest, then you let it go. Don't jump into the market, because jump into the market, you won't know what you are risking, right? Because probably sometimes if price gives you that BOS already, price gave you that BOS, and you've had your limit order there, and you're waiting for price to come all the way to pick you up to the next high. Price does not do that, so you like, there's nothing you can do about it. All right, sometimes price leaves us and go our way, and most times they actually pick us up. So don't jump into the market. Don't jump into the market. Don't jump. So if it goes, it goes. Like I said, forex trading is 10% selling, 10% buying, and 80% waiting. So while we're here talking, you have already strategy on V75. Okay. Yo. All right, fans, let's go. More questions. You see, I want us to actually have I want us to test this strategy here on the channel. So whenever you see something like this, okay, on any of your charts, any of your assets, you can quickly call our attention to it. Then we'll look at it together, and we'll see if it's actually good for us to take. Then we move. If not, then
Okay. Good evening, my leader. What if this happens when price has not gotten to our POI? What do we do?
Okay, when, for example, price is going to your POI now, but price has taken what? Price has taken what? The daily high, right? And or
Yes.
daily low, and it
Yes.
gave a change of character on 15 minutes. Now, this is it. Remember, this bearish candle, this bearish candle that has printed, there are actually buys inside this bearish candle. They actually buys inside this bearish candle. There are buys there. Because when you go to lower time frames, you see those buy candles there. All right. So in most cases, from my back test, whenever you see something like this, price took out this low, gave you that break of structure on 15 minutes. Let's say you see something like this on 15 minutes, right? You see something like this on 15 minutes. After it took out this high, you now see something like this. Maybe price gave you this, something like this, right? Now broke this structure on 15 minutes. Okay. After it has taken what? That daily high. Then on 15 minutes, you know something like this. Okay. Now, in most cases, this is what will happen. Even if price will continue to buy all the way up, you always get this retest, right? You get this retest. Remember your range. Remember your range. Now, if you are taking a sell from here, where is your next TP? See, most of you, instead of you to take your TP at this range here, you'll be waiting for price to create what? In a lower low for you. Whereas the range is what? From this region to what? To this region. This is the up up range. This is what? The down range. So your TP should be what? At the range there. Because in most cases you can see that you notice that price can just come, give you that wick out here, and continue what? Buying all the way to the upside. Right? Like that. So if you are looking at that, then make sure that you have your range in line for the smaller time frame. Okay.
Yeah, before the last question, I was just about to say that it can be used in a trend continuation.
Yeah, very cool in trend continuation. Very cool in trend continuation. Very, very cool.
If you look at this chart now, where we have something like should I say breaker block to the left side, where we have the lengthy sell candle.
Here?
Yes, exactly. You see it happening around that area. That one took that high, came down. Then the next green candle again, the red candle
just like here, right? You saw here. This guy gave us that bullish candle, right? He took out that bullish high. Probably might have given us that BOS, right, to the downside. Okay, this one also printed bullish. Price all the way up towards clear that high. Probably give us that bearish change of character to the downside. As simple as that, fam. Like no, it's easy. Like basic. Let's go back to the basic. I'm not saying this strategy is 100%, but I'm saying it's instead of making things too complex for ourselves, we can actually make things and see them as basic as they are. Okay, and we can actually make you don't always get this. Like you don't always get this every time. You don't always get this every time because sometimes you just see the trend continuation just like that. You will not see any candle taking out the daily range or daily high or daily lows. But what you just see is price moving all the way. So those times that's where you wait. Price is time. It's all about waiting. You wait. All right. So let's see how this will go for us. Let's back test on our charts. Okay. Yes, fam. Apostle, yes.
I'm just joining in now. Please, is the class being recorded?
Yeah, it's recorded.
Okay, I was in transit earlier.
Okay, no problem, fam. No problem. Any other question, farms? Like I said, it's so tomorrow we'll be going through the basic strategy to trade the currency market. Okay, just as basic as possible. Let's do these things. Let's make it basic Okay, let's make it basic. And I want us to keep looking at our charts. Whenever we see things like this happening, we can just call the attention of the channel. Okay, drop the markup. Don't come telling us that this thing is happening on V75 or it's happening on Boom 1000. Just drop your charts. Show us the daily high or daily lows being taken out and the change of market character at that region. Then we can see if we all can get a good entry from there. Okay, as easy as that. So that for those of us that will be taking prop accounts, we can actually make good use of these things.
Excuse sir.
Yes, fam.
What do you consider as your valid break of structure? Is it when the wick breaks the candle?
No, not weak. No. I consider the full body, fam. No, body, not
body
weak.
Breaking the wick.
Yeah, full body breaking it, not weak.
Thank you very much.
Yes, fam. Okay, fam. I think the ladies are getting this. I think they're getting it very well. They don't want to. I think they've asked their questions.
So, sir, this strategy is basically between daily time frame and 15 minutes?
Yeah, for me, yes, fam.
Okay.
Yes,
please, good evening, sir.
Evening, fam.
Please, can you recap about that patient you were talking about? Patient.
The patience. Okay, yes. Patience. Like, you see, whenever there's no setup, like you see, when traders come into the market, like you wake up in the morning, you go to your charts, you see the market printing basically bullishness. So the structure is actually very bullish, and you just, as a smart trader, you just see you saw break of structure on 5 minutes, maybe a sell break of structure, and just because you've seen the sell break of structure in a very bullish market, right? You just want you want to trade. You go in, you place your sell. Maybe in the next few minutes you're out. Like you're out. You're bloody out. You're already bleeding. Okay. Now, if you are patient enough to wait for that perfect strategy, to that perfect setup, because you know that in a bullish market, definitely there will be a retracement. There will be a retracement to what? To the valid point of interest, which is the higher low, right? But just because you are seeing bullishness all over, or just that bullishness, you jump into the market, and immediately you are jumping in market retracing. The next thing you are saying is, this smart money, I don't understand this smart money self. These people say they don't know what they talk, like all this kind of stuff, all right? So, but instead of, if you ever had to doubt your setup, then that means you are already wrong. You are already wrong. Like you're doubting your setup. This guy, are you sure this guy is a break of structure? Or are you sure that this guy will play out? Or this guy, you understand? So from our yesterday's class about market structure, we already identified those true regions, those valid structural points where you should be looking at what? Buying or selling. You see, when you are seeing something like this, you know that you are saying, for example, in this market, we have this market printing high highs and higher lows. All right. You know within yourself that the highest probability setup here is price what coming all the way to this region to give you the next buys. All right. But just because you are very greedy and you just want to pick some crops off the market, when price just gives you small retracement here, you just jump in and you're already buying. Before you know, price comes back to retrace back to this spot of interest. So taking your trades from highest, and you know that before price can get to this region might probably take days or maybe hours. All right, just because you are very, very impatient, when price just retrace a bit, you are already buying, and before you know, price still comes all the way to what play out from that high probability region. Right. So when trading, we should always be very patient because trading is all about waiting. wait for that perfect setup. Wait for what? For that perfect setup. All right. You can see when price was selling all the way, price never gave us a week. Like here, first candle printed, second printed, third, fourth, fifth. That's 5 days. Sixth day, until price now what gave us that week out of that candle, then probably distributed or change character before selling. And this day again, which was the next day, price printed again, came. Then you have to wait for another day again to get an entry. Price was wicked out the high, probably give us that change of character or break of structure before what selling down. Now 1, 2, 3, 4, 5 days again you wait. That is if you're trading just from 300. So trading is all about waiting, like it's all about waiting. All right, 80% waiting, 10% selling, and what 10% buying. All right, because you don't want to be the liquidity. Don't let the big boys to use you as liquidity. If not, you'll be slaughtered in a matter of minutes, especially when you're trading the currency market. All right. Let's go. More questions. Sir, ladies not define money. Please, ladies don't find money. Okay. Yes, fam.
About take profit. Which time frame do you use for the take profit? Is it the range of 15 minutes or?
Yeah, the range of 15. Yeah. Yes, sir.
That means more of scalping. You don't go for
range of 15 minutes. Do you call 1 to 3 or 1 to 5 scalping? It depends on the way you are looking at it, fam. If I'm risking 1% and I'm getting 3% or 4%, I think I'm very, very cool with that.
Okay.
Yes, fam.
Thank you.
For the patient aspect, what time frame is better to trade and be patient about it?
Yeah, daily time, definitely the daily time frame. Because that's where you get
the daily time frame.
Yes, fam.
Okay, thank you.
You're welcome, fam. Let's go. More questions. Okay. So tomorrow we'll be having that big strategy for the currency market, and lastly, on as for the last day, please mute yourself, fam. Then on the last day, like I said, we'll be having the CEO of FT Niger live with us here. Okay, so those of us who's asking if FT Niger is a legit trading prop firm, or if it's if they are how they calculate their drawdowns or their consistency rules, stuff like that. So this strategy works for crypto market? No, sir. No, ma. Okay. No, please. No, please.
Hey, sir.
Yes, fam.
Yes, can you please drop the link for the strategy in the bearish market and also in the bullish market so that we can just go over it?
Can I what?
Can you drop the link?
I'll drop the video. I'll drop the video of the video is free. I'll drop the video so that you guys can go through the video again and get all right. I'll drop the video.
All right, thank you.
You're welcome, fam. So that will be all for tonight. So we'll meet again tomorrow, same time, same platform. Right, you don't want to miss tomorrow for those guys that trade currencies, and especially for those of us that actually trade prop accounts on currencies. Okay, that strategy is very good for us, especially those of us that have limited time with prop firms. Okay, so you don't want to miss tomorrow's class. Okay, so let's invite our families or friends to actually benefit from this opportunity. You can actually add them you can actually add them through the channel settings or send the link to them. Okay, so we'll meet again tomorrow, farms. And if you've enjoyed this class, drop a 333 on the chart. If you actually enjoyed the class, drop 333 on the charts. Let's appreciate VTN. Let's appreciate the educators. Let's appreciate the mentees. Drop a 333 on the chart. Thank you, farms. Let's go. Let's go. Let's go. Okay, let's go. Let's go. Let's go. Pastor Smart is here. Wow. Let's go. Let's go. Mr. Shaibu, I see you there. Mrs. Mercy, Pastor Chimidu, Miss Hawa, Mr. Emma, Mr. Agaba. Thank you, farms. Thank you so much. Thank you, farms. Mrs. Onyedika. I cite you, ma'am. Pastor Dami. And then Pastor Havila. I appreciate you guys. Somebody told me 419. Pastor Dami, you said you're talking 419. And you are in Lagos, I'm afraid. All right. So, farms, I really appreciate you, farms. Okay. Do enjoy the rest of the night. Have a wonderful night rest, farms. Good night, farms.
Good night, coach.
Yeah.
Good night, coach.